Welcome back to the Dividend Diplomats YouTube channel, everybody. Lanny and Bert here. We're back to bring you another quarantine-style YouTube video. Lanny's getting ready because he's pumped up because we are about to talk to you about Lanny's first dividend stock watch list of 2021.
You know the drill. Smash that subscribe button. Give Bert and I a glorious blue thumb. Turn it blue. Quarantine style. Another video. Bert's in recovery mode, sipping on that tea and honey, just trying to get out of this COVID-19. Can't wait. Thanks for bearing with us as we record these videos. As Bert said, we cannot wait to talk to you about the dividend stock watch list for January 2021.
Yeah, the stock market in 2020 was absolutely insane. We saw it touch record highs on New Year's Eve right before the calendar flipped. So who knows what 2021 is going to bring? I can tell you I was not expecting that investment year to happen, but we're excited for 2021. So as usual, every month, Lanny puts together his own dividend stock watch list. He publishes it on our blog. We do also write on our website as well. And he puts out 3 stocks that he's going to be focusing on over the next few weeks and over the next month, I should say. So we're excited to see what Lanny's watching in 2021. It'll be an exciting time, so let's get ready.
As Bert said, 2021 definitely finished off at another green streak. We saw December really push the, numbers up on the S&P 500. The stock market is soaring. They're up over that month alone. And I want to say the S&P 500 ended 2020 up 15 to 16% plus. Obviously, the big hopes and plans, well, actually, the economic stimulus, those checks are entering your bank account. So check it out right now. You may have gotten somewhere around 600, give or take, depending on your income levels and household numbers. But those stimulus checks are entering your bank account, plus all the other extended benefits related to I call it the CARES Act round 2, stimulus round 2, and continuous quantitative easing from the Federal Reserve is happening still as they're buying billions of treasuries each week. So that is pushing the stock market up. And the hardest thing, that Bert and I have to do as dividend investors is how do we locate and find those undervalued dividend stocks to buy right now, next week, the month. We do it continuously. And obviously this month was no different, putting together the January 2021 stocks to buy. So really looking at that record high stock market, running stocks through the Dividend Diplomats Stock Screener and finding those stocks. Now, Bert, what is the DD stock screener metrics for those that don't know?
Yeah, we look at the price to earnings ratio to make sure it's less than the S&P 500. We then check out the dividend payout ratio to look for underneath 60%. But we also think that perfect dividend stock payout ratio is between 40 to 60%. And then we have the increasing dividends, the history of increasing your dividend. We want to see those companies increase their dividend annually. And we ideally love to see some dividend aristocrats that are 25 plus years, some dividend kings that are 50. However, we are going to look at any stock that has any streak of increasing their dividends. And as Lanny said, this is our tried and true method to help us find those undervalued dividend stocks because we're looking at the valuation. That's one of the key pieces of our stock screening metrics. So it helps you find those undervalued stocks in these high market times. It's not the easiest. We never said it was easy. Investing is not supposed to be easy. You're supposed to do your research to find those stocks, but that's our formula. That's how we find those stocks. And that's why we're excited to bring to you that Lanny still found 3 undervalued dividend growth stocks to watch during the coming months. So Lanny, do you want to kick it off? Who is the first company on your dividend stock watch list?
Let's kick it off. I know that Bert and I love talking about what's going on with AT&T, especially with our latest few videos that we've come out with AT&T. But I'm going over to not the blue side, but I'm taking the red pill, Neo. We're going to big red, Verizon Communications, ticker symbol VZ, throwing in that curveball, that Tim Wakefield knuckleball. We are talking about Verizon. And why? Why am I taking Verizon? Well, first, they are going to be, and they are currently the leading company in the 5G network communication. and you know that they're going to be the highest bidder in that 5G auction once it ends. So they are trying to just be the leader of the pack. And when you think of telecommunication, it's a very continuous cash flow machine. So that I do like about Verizon's, when you think about their business model. And then they also do a lot of other things off, not your everyday customer. They do a lot of other projects and ventures with other companies and governmental entities, large corporations. So they have a lot, their fiber network. There's just more that Verizon does than just being the leading network provider for 5G. In addition, their balance sheet's a little bit better than AT&T from a debt level perspective. And Verizon, they're trading at around that $58 per share. They also didn't have some crazy stock market swing year. And I also wanted to look for another, kind of a complement to my AT&T stock position. And obviously Verizon, sticking with the U.S. is another, company that offers similar services, maybe some different services, but it could be a complement to AT&T.
Yeah. It can't ever hurt to have the market leaders in your sector, both of them, because they're both great dividend stocks and they both have strong dividend growth history. Lanny's not bringing in a second competitor into his profile that's just a growth stock that doesn't pay a dividend here. He's still talking about companies that pay a nice, strong dividend, as you're about to see as we go through the stock metrics. So going through Verizon in the stock screener, Lanny said they're trading at about $58 a share with their projected forward earnings from the analysts of about $5.01 going forward. That gives them a PE ratio of under 12. So we've talked about how the stock market's just climbing in 2020 and how it's probably going to keep climbing in 2021. Stock market's PE ratio is well over 35x to end the year, which is insane. So Verizon here with a under 12 PE ratio, trading at a discount to the market. That's a huge first check here in our Dividend Diplomats Stock Screener. Their dividend payout ratio, their annual dividend's $2.51 per share. Take that, divide by the 501 in the forward earnings. It gives you a dividend payout ratio of 50%, right smack in the middle of that perfect payout ratio, that 40 to 60% range. And Lanny, you want to talk about, well, actually, I can round this out here at their dividend growth. They've increased their dividend for 15 consecutive years here. Not quite an aristocrat, but 15 consecutive years of increasing your dividends, pretty solid. So, hey, I can see exactly why they're on your watch list in this month, Lanny.
Thanks, Bert. And, with Big Red, with the red check mark, not only do you get it across, all those dividend stock metrics, but they also yield 4.3%. So not abnormally high, not unusually low. They grow their dividend year after year. It beats inflation, which is nice. But again, they have more growth prospects maybe than AT&T. And, very curious what the future will hold for Verizon. But Bert said it, under 12 PE, 50% dividend payout ratio, 15 plus years of dividend increases at a dividend growth rate of north of 2%, plus their dividend yields over 4.3% currently. Verizon, first dividend stock on the watch list.
Yeah, we're moving out of the communication sector here for the second dividend stock on your watch list, Lanny. And this has been a company that has been on your watch list a lot over the last several months. I've seen this company continue to pop up because guess why, people? The metrics still make sense for this company. It wouldn't be on Lanny's watch list if all of a sudden their P ratio was jumped up to 100 or even in line with the S&P 500. But dividend stock number 2 still has found this way on your watch list. And what I like about them, Lanny, they're a dividend aristocrat. They're in a highly consistent revenue sector because they operate in the aerospace and compete with a lot of government contracts. They continue to win those government contracts. Does anybody, all right, our subscribers have to know who we're talking about by now, but for those new subscribers, those new viewers that we have, dividend stock number 2 on your watch list is?
General Dynamics, ticker symbol GD. They've been on my watch list for, probably half 2020. They have been off the watch list a month or two, but they're back, baby. If you actually look at their stock price history, they at one point were trading at near $190 to $200 per share. And given that they're back down below $150 a share, we're talking over a 10% distance away from that 52-week high. Right now, 21 analysts are projecting an average earnings for 2021 just north of $11 per share. So when you crank the numbers, the PE ratio is below, competes fairly well with Lockheed Martin and some of the other larger competitors. What makes GD different is that dividend payout ratio and their growth streak that we'll get into. And we'll actually have Bert finish up maybe two metrics at the end. But their dividend payout ratio for General Dynamics, they pay $4.40 in dividends per share. So when you take that over the projection of $11.46, that dividend payout ratio for GD is only 38%. That way you can sleep at night. You don't have to worry about any sort of dividend cut. In fact, the only thing you're going to be worried about is, oh, wait, did the dividend come this quarter? And how much is it going to increase? And then, Bert, what about dividend growth and maybe dividend yield? Do you want to go into those two metrics?
Absolutely not. No, I'm kidding, everybody. Let's jump right into there. What Lanny said is their dividend growth has been what kind of sets them apart from the rest of the companies that are there in the sector. They have increased their dividend for over 25 consecutive years. So you know what that means? Dividend aristocrat. So they are demonstrating that they can continue to increase their dividend. Their payout ratio is below 40%. So I don't see this company streak snapping anytime soon as they continue to have room to increase that dividend with their forward earnings. Their 5-year average dividend growth rate is actually pretty strong too. It's about 10%. And they just announced in last year their dividend increase of 7.8%, so just under 8%. Very solid metrics for a company with a dividend yield, which I'll get to next, right around where it is. So you can see why Lanny continues to have them on their watch list when their price is below 150 per share, because that seems to be Lanny's magic number for General Dynamics. The company's it has a strong dividend growth history, and that dividend growth rate is pretty solid. And that bonus metric in our stock screener, the dividend yield right now, with that $4.40 dividend yield, they're right around 3% on the dividend yield. So any company that has a 3% dividend yield and an average dividend growth rate of 10%, yeah, that's a no-brainer that they should be on your watch list if they are continuing to meet the valuation metrics. So excellent job, Lanny, bringing them to light. Hopefully some other people can add them to their watch list as well. I know they're going to be on my January watch list because I need to continue building my position in this aerospace giant.
That's right, Bird. Keep adding shares, man. Keep getting that forward income, which, as you know, dividend investing, dividend income is our favorite form of passive income on the journey to financial freedom. But to get into dividend stock to buy, number 3 for January 2021, we're bringing it back home. They're back on the watch list as well. We're talking about the JM Smucker Co., ticker symbol SJM. We've talked about them now for the last maybe month or two. You can find them in your pantry. The coffee with Folgers. They have the rights to sell other products, that are large on the shelves at the store. The Jif peanut butter. Obviously, the Smucker's jelly. They have a very good footprint within the pet food as well. You can't forget about the espresso with Cafe Bustelo. So again, a very pandemic-safe company, and I don't think that the pandemic is going away. Here we are in January 2020. More people are still at home. Nobody still wants to do anything. We actually have curfew orders here in Ohio until the end of January. So again, people are going to be inside of their house for at least the near term, and more than likely shifted the mindset for consumers, I think, across the country and world.
Yeah, and what the pandemic has shown is the resilience of some of these consumer staple companies. A few years ago, consumer staples fell out of favor as they were just considered the boring, the brands. They're not exciting. They don't have the growth stock. But when the pandemic came, people were staying at home, as Lanny said. Back came roaring these companies that have these strong brands that can get a lot of the product out. You still are always going to be eating your peanut butter. You're still going to always have the jelly, the coffee, all the brands that Lanny listed a few minutes ago. I don't need to rehash it, but Smucker's has proven that their product is not going anywhere anytime soon. And as Lanny said, probably 2021, 22, 23, 24, 25, people are still going to be buying Smucker's brand products as they continue to fill their pantries and feed their families.
That's right. So the 3 Dividend Diplomats Stock metrics for Smucker trading at or around 100 $8 per share. Analysts are looking at $8.38 going forward. That's based on 15 analysts. So really using that metric, dividing it by the share price, you're getting to a PE ratio, the first below 14, which again is less than half of what the S&P is trading at with over 35 times earnings. Slide into that second diplomat stock metric of the dividend payout ratio. They have a perfect dividend payout ratio. Payout $6.60, so dividing that over the projected earnings, they're actually looking at a dividend payout ratio just north of 40%, but well below that 60% threshold. The dividend growth. They've now increased their dividend for over 17 plus years. And I go back to about 2002, 2003. Again, they're building that track record, really getting into that dividend aristocrat territory. 5-year growth rate is just north of 6%. And when you pair that with that dividend yield, which is now north of 3%, again, kind of like a good pair right there, above average dividend growth rate and above average dividend yield. That's a great dividend to have or potentially to buy for your stock portfolio.
Mm-hmm. Yeah, so if you look, this is yet another company that Lanny has on his watch list. I don't know if you realize this. All three of the companies have dividend yields of 3%. They have payout ratios below 50%. Verizon has the highest with 50%, but Smuckers and General Dynamics are slightly below as well. They all have strong dividend growth histories here. All of them are in the teens or higher, and their recent dividend increases are pretty strong as well. All of them outpacing inflation, so you get a strong yield, strong dividend growth, great dividend history, awesome dividend payout ratios, and all three of them are trading significantly below the current marketplace. So it's easy to see why you picked these three companies on your watch list, Lanny. So I think you've done a good job finding those quality dividend growth stocks to help people increase their dividend income and passive income if they decide to purchase them as well.
3 dividend stocks, Verizon, General Dynamics, and Smuckers. What's on your watch list though right now for February 2021? What stocks are you buying right now? What stocks are you buying tomorrow and for the month? Please share them below in the feedback and comments. If you haven't already, definitely subscribe to our channel. Smash the thumb to turn that mother effer blue for the DD right here. Again, we're excited for 2021, excited to increase that dividend income. Bert, do you have any final thoughts?
Nope. I just think let's all work together in 2021 to increase our dividend income, increase our passive income, and just get ourselves one step closer to financial freedom. That's really all I got.
Yes, this is Lanny and Bert from the Dividend Diplomats. Over and out.
Over and out.